Jay, if you don't mind, I'm going to start with you. You put out some research over the weekend. You say that these tariffs are going to cost U.S. manufacturers an additional $144 billion every year. What's creating that additional cost? What does that mean for the manufacturing sector?
Yeah, well, good morning, Frank. Look, just to start it off, I represent manufacturers in the United States. We want to see manufacturing grow here. But that means we've got to have the right conditions, the right tax policies, the right regulatory policies, and anything that adds to the cost of doing business in the United States makes it more difficult to invest and hire and raise wages. So as we see the impacts of these tariffs, we're going to have to see what happens to the American consumer. We're going to have to see what happens to the cost of doing business. The president, to his credit, said that these policies would cause some pain for Americans, and he has tried to warn folks what's coming. We're going to have to see how this plays out, obviously.
We're definitely going to have to see how it plays out. Steve, good morning to you. Great to have you here as well. I want to talk to you about how CEOs are seeing all this. I've seen a number of analysts come out and say, well, these tariffs will probably be short-lived, but how does the uncertainty impact business leaders?
Well, I mean, if you look at the projected results, the Conference Board projects that GDP could slow by nearly 1 full point. Inflation could rise by 0.6 of a point. You know, this puts us near, it'll feel recessionary, you know, if the economy slows to this level. CEOs don't like uncertainty. They want to know the rules of the game. You have to plan for the long term. You have to know what your cost of capital is. You have to know what your volume projections are going to be. When the rules change like this, everybody just stops. All investment stops. Everybody holds back. That adds further uncertainty and a further drag and friction to the economy. So it's not a good time right now in the economy. And obviously you see markets declining. The only way these things make sense is if this is just a shot across the bow, that this is the opening of negotiations, renegotiations of the USMCA. Otherwise, why would you take your two closest trading partners, your two closest friends, and start there versus starting in some other areas?
You know, Steve, you're mentioning the USMCA. We actually heard from the UAW over the weekend saying that they're in support of aggressive tariff action. But I'm going to show the audience and read to you guys another tweet that we got from the UAW president. He said, in part, we need to stop plant closures, bring back American jobs, and stop the global race to the bottom immediately. Then he goes on to say, speaking of the USMCA, any tariff action must be followed with a renegotiation of the USMCA and a full review of the corporate trade regime that has devastated the American and global working class. I want to focus on that part about the renegotiation. Jay, with you. Do you believe that the USMCA needs to be renegotiated? And if these tariffs, which are going to create, according to your research, some short-term pain for your industry, does the renegotiation, does that create a benefit long-term if that's part of a two-pronged plan?
Well, look, the USMCA was going to be reviewed in 2026 anyway. When it was implemented 5 years ago, manufacturers responded to that. And to Steve's point, you know, that certainty that was provided by a negotiated and accepted trade agreement by the three countries enabled manufacturers to make investment decisions. Those decisions have been implemented, and now we have more uncertainty about, you know, what's ahead. We were pretty pleased with the outcome of USMCA. In fact, we supported it greatly during the negotiation phase and the final implementation. So I agree with Steve. It seems to be it's a little unusual that we would come after our two closest trading partners and also our closest allies, both geographically and from a national security perspective. But we assume that there is a rationale for this. My biggest concern, Frank, to be honest with you, is what happens to small manufacturers. They don't have the flexibility. They don't have the access to capital to make rapid decisions that are going to be required as trade flows are affected by these tariff increases.